Hi everybody, welcome to the channel. We have a special guest with us today. We're talking to, of course, Cory Lewis. It's the first time we met over the videos, but I'm a member of the Institute of Luxury Homes. I've done a lot of rural properties, and then I was really interested because you did that great article just about financing an acreage. So I've got some questions coming from the article, and it's always better if someone else kind of runs through it. The one thing I do notice that a big part of the mortgage application is the size of the land, the acreage that the property's on. Because most of the things, that I always did was country residential instead of a normal residential who got maybe 2 or 4 acres. So that was most of mine, and I've done big acreages out in the country somewhere. But just go over that bit about the size of the land, where it makes a difference.
Yeah. Absolutely. So, I mean, just like you said, country residential is definitely easier to finance. You know, when you're looking at acreages at that kind of 10 acres and under mark, you know, most buyers can get in almost like a standard residential purchase, 5% down, high ratio insured, or 20% down for a conventional mortgage. Once you get above that, every lender is a little different, Stu, in their guidelines and how many acres they will give value to. Obviously, ATB and the credit unions are a little more generous, and it's not so much about how many acres, but more about what's the norm for the area. So, you know, if most of the lots in that area are 20 acres, they might give us value to that full 20 acres. Whereas, you know, TD Bank might only say, well, we're only going to give value to 10 acres. And so what that can result in is, again, a larger required down payment, because they're going to appraise however many acres they're going to give value to. And if you're buying this property for $1 million and they only value the first 10 acres and the house and the land and the garage, at 700, then you would need a minimum down payment on that 700K, and you'd have to make up the difference, that 300K shortfall, as additional down payment. So the same thing kind of goes for those outbuildings. You know, a standard mortgage is for a house, a garage, and the land. Anything outside of that is typically not included in the market value by the bank, or the bank appraised value. That doesn't mean that the market value is not there, but you know, the bank value, sure, when they do their appraisal. ATB does recognize a certain amount in outbuildings now that they will lend. It's very limited though. Keep in mind, the mortgage you're typically going to get is based on land, house, and garage. So if you've got a giant Quonset or a shop and it's like, you know, $100,000 heated building on your land, that can result in you needing a larger down payment on the home, because they are not going to lend you based on the value of that outbuilding.
You say like country residential. Is there a big difference between if it's agricultural for one, or farm and ranch?
So the zoning is a big deal. Country residential is so much easier to get financing for than ag-zoned, agriculturally zoned properties. If it's ag-zoned and there's really no farming component, so if you're just buying 10 acres that's zoned agricultural, but you know, there's no pastures and barns and Quonsets and any indication that you're going to be farming there, you can typically still get standard financing with a number of lenders. As soon as we bring in a farming component and it's considered agricultural and a farm, that's kind of where your options become more limited. You know, you're looking at the farm credit unions and lenders who will give value to that farming income as well. Zoned agricultural, the better time you're going to have getting financing, but that farming component is a turnoff for a lot of lenders. Again, it can vary from one lender to the next, Stu, but you know, you have to have good water to get a mortgage on a property. There's ways that we can verify that. Obviously, the water potability tests, you know, some lenders will require that. In recent years, though, we are finding a lot of lenders are accepting title insurance in lieu of that water potability test. Clients don't have it, so that's always an option as well.
And it's pretty standard, isn't it? I'm going to say a septic test, well test, home inspection.
If I was buying an acreage, for sure. I mean, you know, that's a pricey thing to fix and put in a new well. You want to make sure you've got good drinking water, good flow rate, you know.
So it's only just a few more hurdles. It's a bit more expensive, obviously, but then you just got to do your due diligence. Okay, so I think we just about covered everything then, and then I'm going to put your contact details at the end. Thanks, Cory. We'll talk to you again very soon.
Sounds great. Thanks so much for your time, Stu. Have a good one.
Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.